Do you ever look at successful investors and think, I wish I could do that, but I just don't have thousands to start with? Well, what if I told you that you don't need a fortune to begin building one? That's right. The idea that you need a huge pile of cash to get into the investing game is one of the biggest myths out there. Today, I'm going to show you how to start with almost nothing. We're breaking down 10 smart, practical ways you can start making your money work for you, even if you're on a tight budget. Forget the Wall Street stereotypes. This is investing for real people, like you and me. So grab a notebook, because by the end of this video, you'll have a clear roadmap to start your own investment journey, no matter how small you begin. First up, and this is a game changer for beginners, are micro-investing apps. Think of apps like Acorns or Stash. They are designed specifically for people who want to start small. The concept is brilliant. They link to your bank account and round up your daily purchases to the nearest dollar, then invest that spare change for you. That morning coffee that cost $3.50. They'll round it up to $4 and invest the extra 50 cents. It sounds tiny, right? But you'd be amazed how quickly that digital spare change adds up over a month or a year. It's investing on autopilot. You're not even thinking about it, but you're consistently putting money into the market. It's a fantastic way to build the habit of investing without feeling the pinch in your wallet. It's the perfect first step to get your feet wet and see your money start to grow. Next, let's talk about dividend-paying stocks. What's a dividend? It's like a little thank you bonus that some companies pay out to their shareholders, usually every quarter. When you own a share of a dividend-paying company, you're not just hoping the stock price goes up, you're also getting paid a small, regular income just for holding it. The best part, you can start with just one share. Thanks to something called fractional shares, which we'll get to in a moment, you don't even need to buy a full share. You could own a piece of a big, stable company for just a few dollars. Then, you can use a strategy called DRIP, which stands for Dividend Reinvestment Plan. This automatically uses your dividend payments to buy more shares of the same stock, creating a powerful compounding effect. Your investment starts to grow on its own, like a snowball rolling downhill. Number 3 is a powerhouse for diversification, low-cost index funds and ETFs. I know those terms sound a bit technical, but the idea is simple. Instead of trying to pick one winning stock, an index fund or ETF lets you buy a tiny piece of hundreds or even thousands of companies all at once. For example, an S&P 500 index fund holds shares in the 500 largest companies in the US, so by buying one share of that fund, you're instantly diversified across the market. This spreads out your risk. If one company does poorly, it has a much smaller impact on your overall investment. Many of these funds have very low minimum investment requirements and low fees. You get broad market exposure without having to be an expert stock picker, which is perfect when you're just starting out. This brings us to our fourth point, fractional shares. This has completely revolutionized investing for beginners. Not too long ago, if you wanted to buy a share of a big tech company and it cost $2,000, you needed $2,000, period. But now, with fractional shares, you can buy a slice of that same stock for as little as $1. Most modern brokerage apps, like Fidelity, Charles Schwab, or Robinhood, offer this. It means no stock is out of reach. You can build a portfolio of companies you believe in, even the big-name ones, without needing a lot of capital. It allows you to diversify your holdings with just a small amount of money, spreading $50 across 10 different companies instead of putting it all into one. It's a total game changer. Our fifth strategy is to invest in yourself. This might be the most important investment you'll ever make, and it often has the highest return. What do I mean by this? I mean spending money on things that increase your skills and knowledge, which in turn increases your earning potential. This could be taking an online course to learn a new skill like coding, graphic design, or digital marketing. It could be buying books about finance and investing. It could be attending a workshop or getting a certification in your field. The more you can earn, the more you'll have available to invest in the other strategies we're talking about. Never underestimate the power of self-improvement. An investment in your brain pays the best interest. Moving on to number 6, robo-advisors. If the idea of choosing your own investments feels overwhelming, robo-advisors are your new best friend. Services like Betterment and Wealthfront use algorithms to build and manage a diversified portfolio for you based on your goals and risk tolerance. You just answer a few simple questions. What are you saving for? How long is your time horizon? And how comfortable are you with market ups and downs? Then, the robo-advisor does the rest. They pick the investments, rebalance your portfolio automatically, and keep everything on track. Many have very low or even zero account minimums, making them incredibly accessible. It's like having a financial advisor, but for a fraction of the cost. Perfect for a hands-off approach. Seventh on our list is a more hands-on approach, but with huge potential, peer-to-peer lending. Platforms like Prosper or Lending Club connect you, the investor, directly with individuals who need to borrow money for things like paying off credit card debt or starting a small business. You're essentially acting like the bank. You can invest as little as $25 in a single loan. By spreading your investment across many different small loans, you can diversify your risk. You earn money from the interest payments the borrowers make. While it does carry more risk than an index fund, the potential returns can be higher. It's an interesting alternative way to put your money to work outside of the traditional stock market. 8th, let's explore real estate investing without buying a house. I'm talking about REITs, or real estate investment trusts. These are companies that own and operate income-producing real estate, like apartment buildings, shopping malls, or office towers. You can buy shares of a REIT on the stock market just like any other stock. This gives you a piece of the real estate pie and allows you to earn income from rent collections without the hassle of being a landlord. Many REITs also pay out high dividends. It's a fantastic way to get exposure to the real estate market with very little money down. Our 9th strategy is to leverage your employer-sponsored retirement plan, like a 401k or 403b. If your employer offers one, this is one of the easiest and most powerful ways to invest. Your contributions are taken directly out of your paycheck, so it's automated. Plus, it's pre-tax, which lowers your taxable income for the year. But the real magic is the employer match. Many companies will match your contributions up to a certain percentage. For example, they might match 100% of what you put in, up to 3% of your salary. This is free money. It's an instant 100% return on your investment. If you do nothing else, at least contribute enough to get the full employer match. Not doing so is like leaving a part of your salary on the table. Finally, our 10th smart way to invest is to start a side hustle and invest the profits. In today's gig economy, there are endless ways to make extra money on the side. You could do freelance writing, manage social media for small businesses, walk dogs, deliver food, or sell crafts online. Think about a skill or a hobby you have and how you can monetize it. Then, make a rule. Every single dollar you earn from that side hustle goes directly into your investment account. This separates it from your regular living expenses and creates a dedicated stream of investment capital. It might start as an extra $50 or $100 a month, but that can grow into a significant amount that will supercharge your investment portfolio. So there you have it, 10 actionable ways to start investing with very little money. From micro-investing apps and fractional shares to investing in your own skills and leveraging your 401k, the barriers to entry are lower than ever. The most important thing is to just start. It doesn't matter if it's $5 or $50. The power of compounding needs time to work its magic, so the sooner you begin, the better. Pick one or two of these strategies that feel right for you and take that first step today. Your future self will thank you for it. Thanks so much for watching. If you found this video helpful, please give it a thumbs up and hit that subscribe button for more content on personal finance and investing for beginners. And I'd love to hear from you in the comments. Which of these strategies are you going to try first? See you in the next video.